Stocks trade firm but ranged as weak IT earnings cast a shadow, but strong overnight gains in the US counterbalance. Capital goods and utilities lead gains, even IT sees green, but consumer durables track.
Wipro, Tech Mahindra and LTI Mindtree report slowing growth in the fourth quarter. Tech Mahindra's weak orders, Wipro's lower guidance are concerns, but the latter's buyback boosts the stock.
Axis Bank reports what is a strong growth in advances and deposits for the fourth quarter, with asset quality improving to levels not seen in a long time.
PI Industries jumps on clinching a deal to buy assets for inroads into pharma, but Godrej Consumer slips after it agrees to buy Raymond's FMCG business for 2,800 crore rupees. The Raymond stock, after outperforming for the last many days, also slides. All right, you're with us here on a fresh new edition of Halftime Report. I'm Prashant. With me, my colleague Ekta. I'm filling in. Ekta is the permanent anchor in the program. I mean, it's a good-looking screen, Ekta, once again. 40 points higher on the market, on the index. But I have to say that it's not so much about the Nifty. It is about, as we were saying yesterday, and as it has been for most of the week, single stocks. And actually, take a look at what's happening on the mid-cap index and the small-cap indices. I think that is going to be all that one needs to say about this market. The mid-cap index and the small-cap indices are up 0.75% each, even as the Nifty and the Sensex are, well, 40 points is nothing, right? I mean, neither here nor there. But mid and small caps. By the way, the small cap index is up a full 3% this week, and the mid cap index is up 2% this week. You compare that with the Nifty, for the week it's up about 1.8% or so. So outperformance in the broader markets as compared to what's happening in the Nifty. The Nifty, of course, is inching up. If you look at the Nifty intraday, it's after opening at a certain level, spending time below it. It's basically come back to those levels once again. I'm talking about the Nifty 50, which is back at exactly opening levels, or now slightly above it. 17,958 is where we are at. Ekta.
Hi, Prashant. Yes, like you mentioned, it's not that much about the index, but it is about the index as well, because there's been a creeping slow and steady gain which has taken place. So on a week-to-date basis, like you mentioned, the Nifty is up around 1.8%. We have the mid-caps, which is up around 1.7%. The small-cap index has outperformed. But what has also stood out is the PSU Bank index. While the Nifty Bank is up around 1.8%, the Nifty PSU Bank index has rallied around 6%. And do watch out for that index, because at one point in time, it was underperforming on a year-to-date basis, and now it's gained around 11% this month itself, 6% this week. The other index, the IT index, which has seen a lot of sluggishness, especially post-Infosys as well as TCS, has now seen some amount of semblance come through. So it's up around 3% on a week-to-date basis. A lot about result reactions, the likes of Axis, HUL still down and out since after yesterday's fall, and Bajaj Auto, which came out with numbers earlier this week, is building on gains as well. And maybe the other two Bajaj twins, Bajaj Finserv and Bajaj Finance, should come up for you as well. So it's a whole host of result reactions which is really dominating sentiment today and for the entire week. Talking about numbers, we have Glenmark Life Sciences, which is up and about in trade after reporting what is a strong set of Q4 numbers. The stock is actually very close to its 52-week high as well, 516 rupees for that particular stock. The company reported what was a 21% revenue growth in Q4 on a year-on-year basis. Margins also improved significantly. The profit has also zoomed over 48% on a year-on-year basis. Remember, Glenmark Life is basically the API CDMO arm of Glenmark Pharmaceuticals. We have with us Yasir Rauji, who's the MD and CEO of Glenmark Life Sciences, joining in to talk about the business. Hi, sir. Thanks very much for joining in. 21% growth this quarter. There's been a good comeback which has come through both in your external business, which is ex of Glenmark Pharma, as well as Glenmark Pharma. Can you tell us what led to this revenue growth of 21%?
Yeah, thank you for having me on the show, Ekta. I think, we've got three levers of growth here, right? So we've got of the business. So we've got the generic business, which is the largest business. Now, this has been firing every quarter at about 15-ish% growth. So, this continued to fire because we are a well-distributed business across geographies and across products. what also fired very well this quarter was the CDMO business picked up very nicely. And this contributes not only to the top line, but even more significantly to the bottom line. And then we had the Glenmark Pharma business, which has kind of slowed down in the last 3 quarters, and this fired off very well this quarter. So I think what has happened this quarter is all 3 of our engines of the business have fired extremely well. And that's what has led to this very good growth that we've seen in this quarter.
Right, Mr. Rawji, good morning. Yes, good afternoon actually now, but and this is in line with what you had said after the end of the third quarter, which was more muted, that fourth quarter numbers should be strong, and they are strong. What about the look ahead really? What kind of top line growth should we expect? I mean, do you have visibility for FY24?
Yeah, so we are guiding between 12 and 14% growth on our top line. Okay, simply because, like I said, the generic business will continue to fire, right? Being such a well-distributed business. But the Glenmark business from Glenmark Pharma will also fire well because they were in an inventory correction mode and they've come back to more normal inventories. And so the buying will be more normal now rather than a muted kind of buying. CDMO also has done very well, right? Sorry about that. CDMO has also done very well. And this CDMO business will also pick up from this quarter onwards because one of our CDMO players was in an inventory correction mode and this has come back. They also have a new indication in post-operative nausea and vomiting, which will help to grow that piece of the business. So I guess we'll very comfortably be between 12 to 14% growth for this coming year.
Okay. How are you placed on margins then? Because you've done around 33% in terms of margins. Can you tell us what it's looking like in FY24? Where would you probably average?
So we're guiding at 30-31%, right? Simply because we've seen enough, uncertainties in terms of costs. This quarter, the margins were very good because the costs have come down. Okay, so solvents, for instance, right, which is a reasonably big component for us, have softened, the prices have softened, and that has played out very nicely for us. But then the business mix also has been very good this quarter on the generic side. And like I said earlier, the CDMO has played out nicely. So again, there's been a bit of a confluence here in terms of all the, margin elements also leading to these higher margins. We have guided a little conservatively, I would say, at 30-31, simply because, we don't know how, things are going to shape up. If we remain with the external factors at the same level, then I guess it would be higher. But we are guiding at 30-31.
And just to come back to Glenmark Pharma, that's about 1/3 of your business, right? I mean, that continues to remain at that level into FY24 as well?
So it has come down because in the COVID years, it had gone up to 40%, right? It's now down to around 32%. Okay. And we expect in the near term, it will be at those levels, but then going forward, it will come down even further because we have less of an overlap on the new products.
How are you placed on solvent prices? Can you guide us in terms of whether or not there is any kind of softness which has taken place? If so, by how much? And what do you expect?
So prices are under a bit of pressure because of the US market. Okay. But again, our business is very well distributed across the other markets. So while we need to keep our customers competitive, right, by giving them good prices, we expect that, despite this kind of, price improvement that we'll have to give to our customers, right, overall, we'll see prices at a reasonable level. We expect an erosion on the overall bucket of 3 to 4% going forward.
Just wanted to touch upon one more piece of information with regards to Glenmark Life Sciences, the generic API business, because there are a couple of your peers which are indicating that there was a lot of pricing pressure within that segment. What was there pricing pressure within that segment for your company in specific? And how do you manage to be resilient within that space?
Pricing pressure, like I said, in certain markets is certainly there, right? The US especially, Europe a little bit. But then the other markets hold on pretty well. The other thing that we were able to do quite successfully is pass on the cost, some of the cost increases last year to our customers. So there, I think, we are a bit lucky, I would say, and it's the distributed portfolio that we have. The newer portfolio gets us better prices, better margins, and as a result of that, it gets distributed. But if we had a narrower portfolio, I'm sure we would have that challenge, right? With pricing at the front end, putting pressure on margins. So overall, there is a little bit of pressure in some markets, but then we are able to distribute it across markets and across the newer products. And so that's how that resilience actually comes in.
Just one last question on capacity so I think the Dahej capacity went up. Ankleshwar, I think, is on stream. What's the situation right now, and is all of it behind you?
So we couldn't have been luckier with Dahej coming on last quarter. Okay, I mean we've already sort of reached like 80% utilization with the new capacity at Dahej. With all this new business coming in. So it's great that we were able to get it, done by the end of Q3, and then, Q4, it really kicked in exceedingly well. On Ankleshwar, we are kind of midway on that intermediates capacity, but that has also played out very nicely for us in this quarter. And we expect, and we will finish that off probably in the first half of this year, so that also becomes, contributing towards the business servicing for this coming year.
Quickly before we let you go, Glenmark Pharma has to reduce their stake to around 75% by next year, August. Are there any plans to sell stake? What is the plan to reduce it? There were reports doing the rounds that they would be considering selling majority stake in Glenmark Life Sciences. If you could just clarify on a couple of these points.
So absolutely that, there needs to be a dilution of Glenmark Pharma's stake from the current, 82.8% down to 75%. That's a SEBI requirement, and that process is on. We are also contributing to that process in order to help that reduction in the stake. With respect to, how much will be sold is really up to Glenmark Pharma to decide. So we will not be taking that call, and so I won't be able to comment on that. But yes, the process is on, right? And we are participating in that process to bring down that stake.
Okay. All right. Thanks very much, sir. Good speaking with you. It's a pleasure having you with us here on CNBC-TV18. Good luck with the business going forward. 39 points, 40 points on the Nifty is what we have. 17,953. These are basically, we are back at opening Nifty levels after treading water for the last couple of hours or so. We'll take our first quick commercial break here. On the other side, we put the focus on a few stocks that are reacting to news updates and, of course, fourth quarter earnings, which are in full flow. Stay with us. We're back. Okay, welcome back. Let's shift some focus on some specific stocks. Now, CNBC-TV18 News Break was confirmed yesterday when Godrej Consumer signed a deal to acquire Raymond's FMCG business. Surabhi is here with details on the deal. Surabhi.
Hi, thanks so much for that. So we've been talking about how Raymond selling its FMCG business to Godrej Consumer is an expensive deal for Godrej Consumer. But let's see what it means for Raymond. Now, post this, Raymond Group will initiate two independent entities, Lifestyle and the real estate business. Now, post selling Raymond Consumer Care's FMCG business to Godrej Consumer, Raymond will have two separate entities, which is Raymond Limited and Raymond Consumer Care. And in Raymond Consumer Care, it will have only the lifestyle business, which is branded textile, branded apparel, garmenting, and the high-value cotton segment, whereas Raymond Limited will have the real estate and the engineering business. Both the companies will be net debt-free listed entities. Shareholders of Raymond will get 4 shares of RCCL for every 5 shares held with them. Post the demerger, promoters will hold close to 55% in RCCL and close to 49% in Raymond Group. Based on the share swap, RCCL, which is Raymond Consumer Care's valuation, works out to be 11,500 crores, and the valuation attributable to the public shareholders works out to be close to 5,000 odd crores. Now, Raymond's share has re-rated in the past 1 month, but this demerger is definitely a positive step for them.
Okay, all right, Surbhi, thanks very much for that. Let's listen into what Gautam Singhania, the chairman and the managing director, and Amit Agarwal, CFO of Raymond, had to say about the deal and their outlook on becoming debt-free.
As far as the demerger is concerned, the RCCL will get the cash, and we have at the Raymond Limited lifestyle business which is having the debt. We will demerge the lifestyle business from Raymond Limited into RCCL along with the assets and liabilities as well as debt, so that the cash which is at RCCL from the sale proceeds of FMCG business can be used to repay the debt, and therefore making lifestyle business a debt-free business. At the end of December, our net debt at Raymond consolidated level was 930 crores. Lifestyle business had a gross debt of almost 2,000 crores, which is coming down, and therefore it is easier for us to repay the entire debt of lifestyle business.
Net debt free is something the market has always asked us when you will be. We had committed that we will be net debt free by March 25. I always said subtly that we will, with a little bit of luck, do it earlier, and we're doing it 2 years earlier than our commitment. So I think this all will create exponential shareholder value. Now you'll have totally two different businesses.
Now, Axis Bank is the other one which is in focus. Despite reporting a better than expected fourth quarter on many parameters, the stock is trading under pressure. Abhishek is here with details of the fourth quarter earnings fine print. Abhishek.
Well, as you mentioned, it has performed better on many parameters versus the expectation. To begin with, the watch list has declined by 22% in absolute value, and as a percentage of the loans at 0.65%, it's perhaps the lowest that you are seeing in last 7 years. Deposit momentum was at 15.2% YOY and about 11.65% sequentially. Low-cost deposit share, that's also increased on a YOY and quarter-on-quarter basis, and advances growth was 19.4% YOY and about 10.9% sequentially. These numbers are strong because now they have the Citi's India retail business numbers in their balance sheet. So net interest margin was at 4.22%. This was against the expectation from Phillip Capital of about 4.16%, and provisions were at 12,800 crores, which also included the provision made for the goodwill of Citi's acquisition. So asset quality, the total slippages were at 3,375 crores. Phillip Capital had estimated at 4,000 crore. Annualized slippage ratio of 1.6% is perhaps the lowest that you are seeing in last 10 quarters. Gross NPA ratio of 2% is the lowest in last 7 years, and net NPA ratio is now below 0.4%, perhaps the lowest in last 7 to 8 years. PNL, the NI is missed on our poll. However, the loss is in line with our expectation of the same. Back to you.
Okay. All right, Abhishek, thanks very much for that. So that's on Axis Bank. It's one of the top losers this afternoon, despite reporting what were good parameters when it came to asset quality as well as net interest margins. But let's focus on another stock then. Trent has slipped in trade after reporting what was a mixed quarter. Morgan Stanley has an equal weight rating on the stock. Vivek is here with details on why the stock is down 3%.
Well, absolutely right. So Trent, actually, as you mentioned, it's been a mixed quarter. So revenue growth has been extremely strong for the company in the quarter gone by. So the retail giant has managed to grow revenues almost 64% on a year-on-year basis. And, we are attributing it to both a low base effect as well as the network expansion that the company has seen. However, what's actually made the stock decline has been the fact that margins have declined, and this is mainly due to higher raw material costs that the company was facing. Gross margins have come in at 38.5% versus 44.5% last time around. And this is also being attributed to the fact that in the revenue mix, there's been an increasing share of the Zudio brand versus Westside earlier, which was a much higher margin business. So now, Morgan Stanley has come out with a note post the results. What they're saying is that the fashion business performance was largely in line. However, the share of profits from associates as well as the JVs that the company has, and these JVs include the Star business, entities that are operating Zara as well as, the duty brands. These are the ones that have actually contributed lower than actually anticipated. So gross margins have fallen almost 833 basis points due to changing mix that we alluded to earlier. And also, margins have actually been impacted lower margin Zudio as well as the normal end of season sale that has actually contributed this time around. So overall, the stock is under pressure on the back of the margin miss that we saw.
Okay, thanks very much, Vivek, for that. We'll take another quick commercial break here. 42 points, nothing to complain. 17,960 now on the index. Prakash Gaba will be with us with some trading strategies on the other side. Stay tuned. All right, welcome back. We've got the market, which is up 50 now. I mean, another 10, 15 points. Every time you look at it, is and that is what we are sort of looking at. 17,966 above, of course, the opening level, and now I think almost at the day's highest point. Well, now it's been 15 months since the 76,000 crore rupee semiconductor scheme was notified by the government, but it is yet to approve eligible candidates for the same. Sources tell CNBC-TV18 that the government is in advanced stages of approval process, but there is no fixed timeline. Speaking exclusively to CNBC-TV18, Vedanta tells that it is confident of securing the approvals. Ashmit joins in with the details that he's picking up on this. Ashmit, over to you.
Well, this has been a key aspect of government's plan to, in fact, shift the semiconductor supply chain to India. It was in December of 2021 when the government had notified the 76,000 crore rupee semiconductor scheme. Within a month, we had seen various applications being filed. As far as fabrication is concerned, Vedanta Foxconn, in fact, led the charge, committing to an investment of nearly $1.5 lakh as far as their Gujarat facility is concerned. However, 15 months since that date, since the date of notification of the scheme, we are still we don't have clarity on the way forward in terms of approvals being granted. However, we reached out to senior sources within the government. What they indicate is that while there may have been no timeline set for this, that was done in pursuit of due diligence being done, that the players involved have the necessary technological competence as well as proficiency, and towards that end, have also indicated that they are in advanced stages. The government is in advanced stages of granting sanction to the players who have, in fact, applied. As far as the players having applied, speaking of players, we reached out to Vedanta as well. For one, they have expressed confidence that, yes, they do, subject to government approval, they intend to begin construction in Gujarat for their fabrication facility before the end of the year. They've committed again to that figure of $1.5 lakh crore rupee investment in Gujarat. What's interesting, however, is that while there were questions raised about their technological prowess in terms of readiness, Vedanta, as of now, we reached out to them, has remained silent on finalizing its technology transfer agreement with the European chipmaker ST Microelectronics. So that is a question mark at this stage. However, Vedanta confirms that they are, in fact, their license agreement talks with technology partners are making satisfactory progress, and that's subject to the government. Now, they do intend on proceeding with the Gujarat facility construction in 2023 and ensuring revenue by 2027. So that's the timeline Vedanta is sharing. No word yet on that technology transfer agreement with ST Microelectronics, but Vedanta bullish on this journey ahead. Back to you.
Okay, all right, Ashmit, thanks very much for that. Well, let's move on and get back to the markets. Then we have the mid-cap index, which is managing to outperform today. We do have Prakash Gaba joining in this afternoon to tell us what he's strategizing. Prakash, hi, welcome to the show. Well, the Bank Nifty is a bit sluggish, but what is your call as a whole on all of the three indices, the Nifty, the Sensex, as well as the Bank Nifty?
Well, good afternoon to you. Though it's sluggish, Bank Nifty, as you say, but it is strong. So I would say that Nifty and Bank Nifty both are looking good to me. Nifty has shown the strength. It's trading at 1979.71. Possibly we'll see an up move. Maybe we'll see maybe around 18,000 today. Who knows? But I see strength here as far as Nifty is concerned. Now, Bank Nifty saw some correction, but it's bounced from 42,800 zones closer to that. And the way it's going up looks like it's heading up now. It's a matter of time. We'll cross 43,000 as well and perhaps see more higher level zone. Maybe it'll happen today. Maybe it'll happen next week. But to my mind, Nifty and Bank Nifty both are looking strong. They are maybe sluggish, but it is strong. It is not weak at all. So I have two stocks here. And one is AB Capital, Aditya Birla Capital. Certainly is looking good to me. Basic chart structure is positive. Good consolidation for a week or so and given a breakout today. Trading at 167 Aditya Birla Capital. I think it can go up to levels closer to 170 and beyond to maybe 175 in the days to come. Stop below 166 should be fine. So Aditya Birla Capital is looking good to me. The second stock, I think I look at Ambuja Cement. Looks good. Good base formation and doing a breakout today, setting up, trading at 397. So possibly I have a level of around 420. It may take a few days for that. I think it's going up. Dips until 390 are buyable. So Ambuja Cement is good as well.
AB Capital and Ambuja Cement. Prakash, hi, afternoon. Speaking after a while with you. Just pull up Sona Comstar on your screen, if you will, and tell us if you see anything here. You know, if the high was made on 14th of December 21, Sona Comstar, and it's basically been a case of lower highs all the way to, I think, earlier, I mean, the previous one was February of this year and then April of this year. Is it a breakout here, Sona Comstar?
Yes, it is a breakout, and good to speak with you, Prashant. And I would say that basically when I look at the chart structure of Sona, we saw a low somewhere closer to 420. But the way it has come down to 420 gives me a kind of a resilience. It tells me I'm not going down further, which basically means two things. I will either go sideways or go up. Looks like the way the bar has been formed for the month, and today is 28. If it closes here today, I think it would give a clear indication on a higher time frame basis, monthly chart, that the worst is over and I'm looking up. Only thing is, where do you put a stop? A tight stop below 450 should be fine. A breakout has come in. Even if a breakout doesn't come in, and if it stays here, I think it's heading to closer to around 540 to 550 zones the next month or so. So I think the worst is over. Looks for Sona Coms, and possibly we'll see higher levels in the days to come, even beyond that.
Are you seeing higher levels for the IT space? The index has gone up 3% on a week-to-date basis. Is the worst over?
Looks like. Look at the mid-cap IT impact. I would look at the InfoA, Coforge, I think, and also this Emphasis. They're all looking good to me. I would not look at just TCS and Infosys, but Persistent. Yes, the way Persistent is trading at 4730, I think it's going beyond 5,000. So look at the IT space, LTIM. I think it's looking good. There is some strength out there. So if banks are up and IT is up, Nifty has to be up now.
Boy, what's happening with CET? If you can have the stock up, you know, move started. It should come up as a vertical chart because it just started flying at about 1140 or so. 1140, and then it's just taken off 6.5%, 6.25% higher. But it's not just CET, right? There's so many names which are all exhibiting similar kind of. Look at EIH Hotels, for example, 187. It's up 10%. It was not there in the mix when we started the market in the morning. You know, some of these banks were there, UCO, JNK, etc. were there. Look at GMDC out of the blue, which has come back. JK Tyre is another one. So I don't know if tires is the new kind of theme which is playing out. But JK Tyre has seen a very sharp up move coming through. So really, you know, enough and more in terms of stocks which are moving around, even as the Nifty. I mean, looking at the Nifty's up 50 points, which is good, but just look at the number of stocks which is doing all of this, and the Nifty kind of pales in comparison. Prakash, good to speak with you. Thank you very much for your time. We slip into a quick break here. On the other side, Himanshu Bed, Managing Director of Poly Medicure, will join in for a quick discussion on the medical devices policy being pursued by the government and what is the opportunity for the company in that framework. Stay with us.
Welcome Welcome back. Well, the government has approved the medical device policy, which aims to increase India's share in the global medical device market. Remember, currently we import around 70 to 80% of our needs when it comes to medical devices. Himanshu Bed, who is the managing director of Poly Medicure, which manufactures medical devices, is in fact one of the largest exporter of medical devices out of the country as well, joins in to discuss this. Mr. Bed, thank you very much for taking the time out. If you could just start by telling us what would be the overall impact of this particular policy, and how much do you think indigenous production of medical devices could increase for India, say, in the next 3 years?
First initial feedback we have from the government is that it's going to boost manufacturing because we'll have uniform policy across all these states. Currently, medical device regulation is driven by states and center both. So I think there will be a big alignment there. Also, when you look at departments managing medical devices, there are a lot of departments which manage medical devices. So that will fall under now single window clearance. So that will also, kind of help us in ease of doing business. And I think the third most important point is setting up a medical device export promotion council. So a dedicated export promotion council, because currently we fall under Pharmacil, Plex Council, EPC, EPC. So now we have a dedicated council, and that will help us to push exports. And government will, I think, give some grants also for exporting companies.
Okay. Mr. Beth, I just wanted to touch upon one sub-segment within medical devices, which is basically high-end medical devices. The things like CT scans, MRI machines, robotic surgery machines. Do you think that India has the capability and the ability to manufacture it and reduce the dependence, which currently stands at, majority within the import basket of medical devices?
So I think in last few years, because of the PLI scheme, so PLI scheme did cover these high-end medical equipments, and we are seeing investments coming in AMTZ made by large multinational companies like GE, Philips, Siemens, and also some other local Indian companies. So in 2-3 years, we will see imports going down, and these equipment being manufactured in India for Indian market as well as for the global markets. So already investments have come in last 2 years, I would say around more than 1,000 crores in this sector.
Okay, all right. Is there a difference in terms of quality, say, when you compare the high-end medical devices manufactured in India vis-a-vis the MNCs of the world?
No, I think first thing was harmonization of regulations. And I think that is one important step which will happen through this policy. And once Indian regulations are harmonized with global regulations, I think Indian products will also, find those export markets which are high-end export markets, because currently our regulation was non-existent. Only from 1st October 2022, Class A and B devices have got regulated. And from 1st October 2023, Class C and D devices will be regulated. So once the full regulation, kind of takes place in India for all medical devices, I think then, we will have a bigger market for our products in exports.
Okay. What about your company in specific? Do you have, I know you're present in the disposable segment quite significantly, but anything that you're focusing on when it comes to the high-end segment as well as regulated markets such as US, Europe?
So we have already applied for US FDA approvals, and shortly we should receive the approvals. And so that's where we probably think that the biggest growth will come in future. And also we are moving into critical care segment, and that is also high end, compared to more, making more products for ICUs versus in operation theaters. So that will also help us to move into the higher segment in coming years.
With devices, is the advantage the same as with medicines, which is the cost? Because, you've got giants in the space, right? You've got everyone from J&J to Siemens to whatnot, who've been doing this for decades. So what's the advantage? Yeah.
So the advantage would be, I think, Make in India is a big advantage, because, we will take, access for lower R&D costs, lower manufacturing costs compared to, let's say, other countries. Today in China, the cost of, let's say, one employer labor cost is close to $700 to $800 versus India is around $200. So we have a huge advantage arbitrage in terms of manpower costs. Even our engineering costs, R&D costs are much, much lower compared to any other country. So India definitely has an advantage in manufacturing.
Okay, just a two-part question. Have you participated in the PLI scheme? If so, where do things stand? And secondly, for the US FDA approval, for which medical device have you applied to the US for a US FDA approval? And when you said that soon, what is the timeline?
So I'll answer the first one for US FDA. So the US FDA approvals, we have made the final applications. Hopefully we should receive approvals within this current quarter. And these are mainly for infusion accessories and infusion products, which is our core business. 65 to 70% of our revenues come from those products. And this is where, we are very confident that we will get good access to US market. In terms of PLI, it was for renal products. And we have grown last year 40%. This year, we also plan to grow over 40% in renal segment. Though the base is smaller, but I think it will take some time to, get fully, in this segment because, again, India has a big reuse market for renal products. And as time progresses, reuse has to stop because it causes more infection, reduces life expectancy. So hopefully, as time progresses, we will see also good offtake in renal business too.
Okay, all right, Mr. Bed. We're hoping that offtake does come through because definitely it would be a big boost for the Indian economy if in case the indigenous production of medical devices does pick up. Thank you very much for joining in and talking to us. We need to take a short break. Up next, we'll be focusing on a couple of numbers. Ultratech Cement, which will be reporting its earnings later today. Stay tuned for that.
Okay, welcome back. 50 points on the Nifty. We're at 17,963 now. Ultratech will be reporting its fourth quarter numbers later today. Nigel is here to tell us what the expectations are. Nigel, over to you.
Well, for Ultratech Cement, we're expecting the numbers, and normally it comes between 1 and around 2:30 p.m. odd. But I don't know whether or not this time we'll get it in that time because the con call has been postponed by an hour and a half or thereabouts. So now it's rescheduled to around 6 p.m. Anyways, in terms of the expectations, well, the top line we're expecting to grow by close to around 18% approximately. We already have the volume numbers with us, which the grey cement volumes, bulk of their business, that's up close to around 15%. And the India sales as well is up close to around 15%. That's grey as well as white cement put it together. Consolidated sales as well is up by close to around 14%. So on the top line, most of the growth will come in because of higher volumes. Pricing should be mildly higher on a year-on-year basis, but watch for a sequential, some kind of pressure out there. It can be more or less flattish or it can be a little bit in the negative terrain. What we are watching out for is margins, and margins should look quite good. It should improve on a sequential basis because operating leverage will play out. We already have the volume numbers. Remember, for the first time ever, they've given their volume numbers ahead of their numbers. You have the lower cost as well that will play out. Petcoke, coal prices as well have cooled off. And also the company has been controlling its power and fuel cost as well. So that explains why margins on a sequential basis will look better. On a year-on-year basis, there continues to be some pressure. We'll also keep an eye out on their capex plans. How exactly are they going to be commissioning facilities? And Ultratech Cement, since it's the big daddy, the commentary over here is most watch. Is demand strong enough? Can they push through pricing, or are they going to rely on operating leverage as well as lower costs to drive the profitability? We'll have those numbers with us in the next couple of hours. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's the expectation from Ultratech Cement. Time for a short break now. On the other side, Manisha Gupta, commodities editor, will be joining in with Peter McGuire.
अरे अभी तक मटेरियल आया नहीं। पैसे नहीं है, मटेरियल कैसे आएगा? अच्छा
पैसे का अब भी टेंशन मत लो। यूग्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Let's you and me step out and see how blue the sky, how tall the trees. Cause forever.
Skoda brings you Kushaq and Slavia, India's safest family cars.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
A show that is unmatched.
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively, you can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
Powered by Bandhan Mutual Fund.
Welcome back, and let's chat commodities now. And joining us for that is Peter McQuarrie. He's CEO Extreme Australia. Peter, hi, welcome. And I want to start talking about the crude oil prices. While we have seen a bit of an uptick, and this is after the Russian oil minister saying that the global markets are balanced, and we saw some buying come back. But having said that, this is another week which is headed into the negative. We saw 5.5% decline previous week. We're down nearly 4% this week as well.
Well, exactly right, Manisha. I mean, it's been very, very solid move to the downside, and it's just the continuation of softness. And when it bounces, you know, quite strongly. I noticed Novak's, Oil Minister Novak's comments, and he's saying that it's balanced and there's no chance of, you know, further cuts from OPEC plus, or, you know, there's no need for it. So we'll just have to see how that materialises over the next quarter. But I don't think producers are happy at the price, but consumers certainly are.
Almost at 75 for NYMEX. I mean, are you looking at further declines onto this one?
I wouldn't have been surprised to maybe push it down a little bit further. It's choppy, it's volatile, and, you know, it's hard to find a floor. But it seems to be just, if you're looking at the charts and you're putting your mind back over the last couple of months, it seems to test that low, you know, the 72 sort of range. And then it bounces, and then, you know, and it bounces strongly. And we've seen those big, you know, big, powerful moves. So I'm just sitting here, Manisha. It's short at the moment, and it's been a pretty dynamic week to be short.
Yes, it is. And, you know, while the US GDP numbers came in much lower than previous quarter and lesser than what the street was anticipating as well, would you say that that's exactly what the markets thought it would be? And with next week now about 1, China Golden Week holiday, 2, the US Fed meeting, 3, the ECB monetary policy meeting as well, how are you looking at the metals absorbing all of that?
Well, I take on board what you're saying, and that there's no doubt that we'll probably see 25 basis points. I think that's where it's pretty much baked in from Fed Chair Powell. So, and 50 basis points, a big chance as far as ECB. So it could be a further softness as far as the energy sector. I won't be surprised to see currencies be quite volatile over the next week, especially the likes of the euro and possibly the yen. So, yeah, it's an interesting week, Manisha. Very interesting.
Anything between the metals among the metals that you think is worth holding on the longer side right now?
Well, you've got aluminium sitting at about 8,500. I just made a note of that. You've got, 2,300 now, and copper at 8,500. So they've both given up their gains as well over the last few weeks, and, you know, softness. So, you know, I'm just sitting here observing. Maybe it's a time to buy, or maybe if they sink a little bit further, it could be a time to buy. But I noticed that comment as far as forecasted moving out. World Bank expects year-on-year commodity prices to be down 21% lower in 2023. So that's a concern, Manisha, because they're seeing the big data dumps as far as numbers, and it tells you a pretty big story, World Bank.
How are you looking at the dollar index? Because that doesn't really seem to be breaking away from the current range. We've seen 101 continue to hold. How would you look at the dollar index with 25 basis point rate hike factored in? How are you looking at the next 1 month? What range are you working with?
Well, you know that US dollar index is weighted at about 61% euro, and if the ECB raises their rates 50 basis points and the Fed only at 25, then I think you're going to see a further strengthening as far as the euro, which in turn would be softer for the dollar or dollar index. So maybe that 102 to 100 sort of handle is where it's at until we see something deliberate. Then we can be a little bit more, I think, hand on heart. But at the moment, it's just hold on and let's see how next week materializes.
Clearly. And in the meanwhile, how are you also looking at the gold price now? Because $2,000 per ounce hasn't really held, and this is a second straight week of that.
Well, exactly, but it's only down a little bit at $19.95. Silver's back up, also above $25. So, yeah, the picture, I think we've just got to be conscious. It's wild. There's plenty of movement there, no shortage, and it's great for trading because you see those big big moves of $10, $15, $20 over, sometimes over a session or a session and a half. So, yeah, I'm just sitting here seeing it all and how it all plays out, Manisha, and then you can be, hold on to the reins and, ride at home sort of thing.
But do you think it's 1950, 1930 coming in on the chart soon? I mean, can the prices decline that much?
Well, they might. I mean, I'm not going to rule it out, and no one can really tell you, no one's got that crystal ball, but I'm not going to be surprised what happens. I've just got to sit here and just see if we see further structural weakness for the gold price and when it bounces. But, they're big sweeping changes as far as, from a volatility play, and that's the exciting part to trade that market.
Okay, all right, Peter as well as Manisha, thanks very much for joining in and taking us through that commodity outlook. On that note, we need to wrap up on Halftime Report. Business Lunch will take all the action forward. Stay tuned.